here with you today, and I'm looking forward to talking with you about provisional billing rates. Before I get started, I just want to tell you a little bit about myself. Like Yasmin said, my name is Joe Greger. I'm the Small Business Program Manager for DCAA. I started my career a little over 18 years ago. I moved here from Pittsburgh to Northern Virginia, for the job. And after a number of years as an auditor, I was then promoted to supervisory auditor and then branch manager. About 3 years ago, I rotated into this position, and I've been really enjoying it ever since. Again, like Yasmin said, I'm located here in Northern Virginia. I work at our headquarters, which is Fort Belvoir, Virginia. If you're not familiar with the area, then it's about 25 miles outside of DC. So when I started preparing for this presentation, I thought about all the small businesses that I personally audited in the past or have spoken to in this capacity. And what my experience has shown me was that a lot of small businesses, small business contractors just don't know all the regulations that can potentially impact their day-to-day operations. So my goal today is to help you understand the federal requirements as it relates to provisional billing rates. And hopefully this presentation provides some clarity on your obligations as a responsible federal contractor. So with that said, let's go ahead and get started. So the first presentation is just a short intro and overview. Okay. So prior to 1965, all of the services, military services had their own contract audit and administrative functions. So depending on who you were working with, there were different sets of policies and procedures. So in 1962, the Secretary of Defense put together a study to determine, is it more efficient, is it more effective to have a single contract audit agency? And obviously, the result of that study was, in fact, an overwhelming yes, that it is better to have a single contract agency. So DCAA was established in 1965 by transferring existing contract functions from the military services into one organization. We have oversight of about 9,000 contractors every year, and we average more than 3,400 audit reports. So we actually perform more than 3,400 audits, and we examine more than $350 billion of contract costs. So, a pretty large reach that we have. Our agency mission, as you can see, together with our acquisition partners, we increase warfighter capabilities by delivering high-quality audits and financial services to achieve fair and reasonable prices that protect taxpayer dollars. Okay, so this is kind of how we look like today. We're 4,600 employees strong. We have over 300 offices throughout the United States, and we have a few overseas as well. I know we have one in Wiesbaden, Germany, and I believe there's one in Hawaii as well. As an audit organization, our primary function is to perform all needed contracts for DoD. We also have a small group of employees. We call them financial liaison advisors, or FLA for short. They provide accounting and financial services to DoD and also non-DoD. So the non-DoD, we typically refer to them as civilian organizations, civilian agencies, and so typically they request DCA services, and that's on a reimbursable basis. So we actually get paid to perform these audit services within DoD. Then it's all free. DCA is also involved throughout the entire contract phase. So from pre-award, private contract award, through contract execution, and then also settlement of rates. Okay. This slide here just shows you where DCAA is located within the overall, DoD. We operate under the authority, direction, and control under the Undersecretary of Defense Comptroller. We are organizationally separate from the services and also DCMA. DCMA stands for Defense Contract Management Agency, and if you're not familiar with them, they primarily perform the administrative functions of a contract. Now, why do we have this, kind of organization? Well, every audit that we that we enter into with a contractor, we must follow very strict auditing standards, and those standards actually come from we call it Yellow Book, but it's called Generally Accepted Government Auditing Standards. One of those standards is that we have to be independent. We have to be independent of the auditee, which is the contractor, but we also have to be independent of the end user of our audit report, and the end user are those people that make procurement decisions. Okay, so a lot of people don't realize this, but DCAA is really just an advisory agency. We really don't have any power. We can't award contracts. We don't say your system is adequate and things like that. Those decisions are actually made with the services. Okay, next slide. So this slide just shows DCAA's organization. Anita Bells is our director, Joe Betts is our deputy. I fall under operations, which is a part of headquarters. DCAA is also organized geographically. We call them regions. So we have Eastern, Central, and Western. Field detachment is a group of auditors that only audit classified contracts. So if you don't have any classified work, then you wouldn't deal with FD. We're also organized around the big dogs, right? The big contractors. We call them corporate audit directorates. And as you can see, we have four for the big guys. So Northrop Grumman, we have one for Boeing, then we have one combined for GD and Raytheon, and then also one combined for Lockheed Martin and BAE. So again, as a small business, you're going to fall under Eastern region, more like, right? So you wouldn't have any dealings with the CAD. Okay, this slide here, as you can see, it shows where the regions are, where the boundaries are for the regions. Okay, if you're a business anywhere in the state of Maryland, you'll fall under the Eastern region, which is that gray area. The orange is Central, and the green, of course, is Western. And then we also have the CAD locations all throughout the country as well. Right here in Northern Virginia, not too far from me, is the Northrop Grumman CAD. Okay, so this slide, as you can see, it just shows a picture of our public website, and we have a lot of resources available on our website. So I'm going to go through a few of those right here with you today. One of the more common questions that I get from small businesses is, they'll contact me and they'll ask, hey, who's my cognizant DCAA office? Well, we do have a little handy tool here, a locator on our website. So if you go to the locator tab and then US CONUS, you'll get this page here. You would just enter in the search parameters, whether it's cage, DUNS, or zip, and then go ahead and hit that search button, and you should get your office. Now, sometimes this may not work. Usually it's because, we don't have you in our database, because we've never audited you, right? That's typically the reason. So if that's the case, just go ahead and contact me, give me a call, or shoot me an email, and I can definitely help you out. So I mentioned earlier about the different, that DCAA is involved throughout the different phases of the award. So this slide here just gives you some idea of the audits that we can perform throughout the phases of the award. And so one of the questions that I'll get is, what are the most common audits that we perform? Well, I would say, in my opinion, the most common are probably going to be, I would say, it's going to be either the annual incur cost audit, a cost proposal, and then I would say pre-award accounting systems. Those are probably the top three that we do as an organization. And so we do have this broken out into different phases. All right, I think this is pretty straightforward. Now, as a small business, there are a few things that are not applicable. So one of them is cost accounting standards, right? So as a small business, if you're self-certified as a small business, then you're not required to follow the cost accounting standards. So, DCAA would never do a CAS compliance audit of your company. Very similar to that, DCAA would never do a business system audit in your company. Business systems are very large, complex audits. We audit your internal controls of your accounting system and your billing systems. things like that. Again, those are we generally just do those at the big guys. Okay, those audits can take upwards of a year, and again, a lot of resources because they're very complex type of audits. So let's move forward. So again, continuing on with the theme of information that's available on our website. We do have here all of the presentations that I personally give are available on our public website. So I highly recommend going there. If for example, today we'll be talking about provisional billing rates. Down the road, if you ever need to refer to that, you can always go to our website and check that out. So again, more resources. And I didn't mention, but our website is www.dcaa.mil. Okay. Just one thing I would maybe point out on this slide is the incur cost electronically model. So, for those of you out there, if you're, kind of experienced with federal contracting and you have cost reimbursable contracts now, then you're actually required to submit your incur cost proposal. And so if you're going through that process, I would recommend checking out this ICE model. It's a nice model to look at and to use, and so the idea is why reinvent the wheel, because we already have it here for you. So, all right. So again, our public website. If you go to the guidance tab here, there's a lot of information here. If you're interested in looking at FAR or CAS or DFARS. As you know, DFARS is the Defense Federal Acquisition Regulation Supplement. Also, I will say, if you are going through an audit, you can always go here and look at the Directory of Audit Programs. And what that is, every audit that we perform, we have what's called a standard audit program. And the standard audit program helps auditors perform that particular kind of audit. And it actually provides audit steps that we can go by. And that helps us achieve, that audit objective. So as a small business, if you're going through an audit, if you know the kind of audit you're going through, you can always go here and take a look and get a copy of that audit program. And then that way you'll know what to expect, right? You'll know what kind of questions we'll be asking. You'll know what kind of data we'll be looking for, so on and so forth. So, highly recommend you check that out whenever you have time. Checklists and tools, I mentioned those. That's where you can find them there. And then if you click the small business link here, it will take you to this page. And then this page actually has the training materials that I mentioned. All right. This also has my focal point number and my email. So highly recommend you contact me if you have any questions. All right. And that takes me to the end of the intro presentation. So I'm going to go ahead and transition over to the other presentation. But if you have any questions, I'll be happy to take those at this time.
Thanks, Joe. I don't see any questions coming through yet, and I'd like to welcome everybody that's joined us since after we did the introduction. Just to let you know, this webinar is being recorded and will be available for replay tomorrow on the PTAC website. And please do type out your questions in the chat box. I'll let you know when any come through, Joe.
All right. Thank you, Yasmin. Okay, so I am just going to go ahead and move forward. Provisional billing rates, right? So we're going to talk about what are provisional billing rates. We call them PBRs for short. I don't know if you realize this, but within government, we do like our acronyms. Certainly we have our share at DCAA, and PBRs is one of them, but that just stands for provisional billing rates. Okay, and so this just shows you sort of the agenda for today's discussion. We'll be talking about the purpose and some procedures. When should you submit, right? That's a very important question. If you're a small business, if you're new to this area, that's a very important question to ask is when should we submit? What information, when you do submit, what information should you provide? When you submit, DCA will review it. So we'll go over some of those. We'll look at some common deficiencies. And so, yeah, let's just go ahead and get into it. So what is the purpose of PBR, provisional billing rates? Well, essentially, provisional billing rates Number one, it's required. Okay, so I mean that's your bottom line. It's a requirement, and so the requirement kicks in when you have cost reimbursable contracts. Okay, so that's really the first, uh, kind of the first baseline, just to understand PBRs are only applicable when you have cost reimbursable contracts. All right, if you have fixed price contracts, then there's no need for this, right? Because the nature of the contract sort of dictates, you know, why you have this, right? Fixed price contracts, as you know, the government is only going to pay you whatever that fixed amount is, and no more, no less, right? Now, there's some exceptions to that, but that's not really today's discussion. But just keep in mind, PBRs are only applicable when you have cost reimbursable contracts. So that's number one. The second reason for why we want to have PBRs, and I think this is really important for you as a business, is the only way that you get reimbursed your indirect expenses is actually through the application of your indirect rates, right? So if you think about it, your direct costs, pretty easy. You know what those are. You can bill the government for those. The government can pay those. Your indirect rates, right, are a little different. By nature, indirect costs are not really identified to a specific contract. Okay, so this is, stuff that happens with the company. You got to do, certain things, but it's real expenses that you incur, and so somehow you need to allocate those to your contracts. Okay, and then that is how you get reimbursed for them. Okay, it's through the application of these rates, and that to me that's really the biggest benefit, or the biggest reason why you want to have provisional billing rates, so that you can get reimbursed for those indirect expenses. Okay. Okay. Now, we'll talk a little bit about procedures for establishing billing rates. All right. This is what FAR says. Okay. Basically, it's the contracting officer or auditor shall establish PBRs on the basis of information resulting from recent reviews, previous rate audits, or experience, or other similar reliable data. Right. So if you actually look at FAR actually says the government, right? Whether it's the contracting officer or auditor. And in this case, they say auditor, generally it means DCAA. Okay? Now, again, what I'm saying is FAR actually says the government will establish the rates, right? Now, if you think about that, it kind of seems backwards, right? I mean, why would the government actually establish these rates on your behalf, right? There's a lot of companies out there. You all operate, independently. You're in different businesses. Okay, your rates are going to be different. Your rate structure will be different, right? So with that said, we highly recommend contractors submit what's called a provisional billing rate proposal. Okay, and that's typically what we do. So I remember when I was a branch manager prior to this position, generally at the end of the year, sometime, end of November, early December, we would always send an email out to some of our small businesses and notify them, hey, please submit your provisional billing rate proposal by January or February of the following year. We would always recommend that they do that. And like I said, the reason is because you know your business better than we do. You know what your actual or what your estimated rates are going to be for the following year. DCAA isn't going to have that kind of insight into your business, and to us, we don't believe we should be doing that. Okay, so that's really important to understand. Okay, now procedures for submission, right? How do you actually submit your PBRs, right? Contractors submit either to, you want to submit them either to your DCAA office or your ACO, right? If you have an ACO, then you want to submit to either them or to DCAA. More than likely, or in my experience, most businesses just submit them to DCAA. We do recommend electronic submissions, obviously with COVID and everything, pretty much we're doing everything virtually. But even before COVID, most of the submissions were electronic. We would get 1 to that were hard copy, and that's fine. Generally, we would always follow up with you and just ask for the virtual, just for the time for it anyway. If you do provide a hard copy, then we do ask by a CD or some sort of electronic format, so we can actually use that for our. Okay. Okay, when should you submit, right? This is another important question. When should you submit as a contractor? When should you submit? So essentially, the rule of thumb is prior to the beginning of the fiscal year, right? That's really what it is. Now here's the thing, right? If your fiscal year is January to December, then that's pretty easy. You want to submit prior to January. Some contractors have a different fiscal year, right? Some contractors have, I've seen like a March to February fiscal year for some contractors. Uh, I've seen fiscal years that mirror the government fiscal year, like a October to September, and that's fine. But in either case, you want to submit prior to that. So let's say your fiscal year starts October 1, then we would recommend you submit sometime, by the end of September. Okay? Some other things to remember: your provisional billing rate should represent a 12-month period. Okay, you want to submit these at least annually. So if it's let's say you have a 5-year contract, you want to do it annually for the entire performance. Okay? And so the other thing, I didn't mention this earlier, but one of the reasons why you want to submit PBRs is because when you submit your vouchers, right, you include your established provision billing rates on your voucher. And if you don't have approved rates, then those vouchers could be returned. So that's another important aspect of this. Okay. All right. What should be provided in a proposal, right? So as a contractor, what should you provide when you submit? It's pretty straightforward. Basically, you want to provide your billing rate calculation, right? So you want to provide the pool, you want to provide the base, and then also within the pool, what are the accounts, right? What are those expense accounts that make up the pool? And the same thing with base. What are the elements that make up the base? Okay. You also want to provide the prior fiscal year pool base, the current fiscal year to date pool base, if that's applicable, the current fiscal year budget pool base, again, if applicable, and then a comparative analysis that explains any significant differences. So that comparative analysis could be comparing prior year pool and base, right, with proposed billing rates, comparing the current fiscal year budget pool and base with your proposed billing rates, right, et cetera, et cetera. Okay. So these are some of the things that we recommend that you provide. All right, now that you've provided this information to DCAA, what do we do with it? What does DCAA do? Well, we actually do some procedures. And again, I mentioned in my intro presentation, I mentioned the standard audit program. You can always go there and take a look at that for this particular type of review. Now, every office is going to be different. Every auditor is going to be different. So there's, again, when you look at the standard audit program, it's just sort of a shell or a framework of some of the steps that you can do. But we do encourage auditors to, tailor those audit steps to meet their objectives. So these are some things you might see. Again, every audit. Every auditor might be a little bit different. They might include other steps, et cetera, et cetera. But, one of the things we'll do is we'll compare the proposed pool base the prior year and year to date. And then we'll review trend of question costs and relevant paper cost audits and consider an adjustment for unallowable expenses. So, and obviously that second bullet is only applicable if we've done paper cost audits in the past. If you're a new small business and you were just awarded a contract, we're not going to have information on file, as it relates to an incurred cost audit. So that's something we want to do. All right, monitoring. So this is very important. So, now that you've submitted your provisional billing rates. DCAA received it, they reviewed it, they said everything looked good, and now, you're using those rates to bill throughout the year, okay? And now we're, 6 months, 7 months into the year, what should you be doing, right? Well, we highly recommend that you monitor your indirect rates. Uh, generally, we recommend monthly, okay? And by the way, if you've attended the accounting system presentation that I do, one of the requirements for an adequate accounting system is routinely monitoring your indirect rates. So not only do we recommend it, but it's also required, you know, when you look at the accounting system requirements. Okay, and so why do we have this? Why should you monitor your indirect rates throughout the year? Well, to me, the biggest reason is, companies aren't static, right? I mean, things happen throughout the year. Look at COVID, for example. I don't think anybody really predicted COVID last March, and so I'm sure many of you on the phone had a pivot, right? COVID hit, and all of a sudden, employees are working from home and this and that. And so I'm sure we had to pivot and do other things, right? Well, that probably and in all reality, it had an impact on the rates. If you weren't monitoring your rates, then you wouldn't know what your rates are, right? So, and again, the reason why we monitor those rates, because if your rates change significantly, right, either up or down, then we would recommend you submit a revised provision billing rate proposal. Okay. So just think about this, right? At the end of the year, okay, so you submit at the beginning of the year and you say your G&A rate is 10%. Okay? And so what that says is you're going to bill the government 10% G&A throughout the year because that's what you think it's going to be. At the end of the year, right, when it's all said and done, you're going to have actual data. And let's say your G&A is 20%. Well, that's a fairly big difference, 20% versus 10%. And so the government's going to have to pay you a big check at the end of the year. And typically, we don't want to do that. Okay. The opposite would be true, right? Let's say you think your G&A at the beginning of the year, you think it's 15%. And then 6 months in, you get this huge award, which impacts your G&A base and it drops your G&A rate, right? At the end of the year, well, your actual G&A was, let's say 5%, but you thought it was 15 at the beginning of the year. Well, you're going to have to cut a check for the government because you were overpaid throughout the year. So that's what we want to avoid. Okay, so by monitoring your rates throughout the year, you can make adjustments so that when we get to the end of the year, we're not going to have these large swings, okay, where you owe the money, where you owe us money, or vice versa. Okay, so that's I think another good reason why you want to monitor rates. Okay, some common deficiencies. One of the things that I've seen was failure to remove unallowable costs from your billing rate projections. So unallowable costs, just like any other proposal or claim or submission, whether it's incurred costs, whether it's cost proposals, okay, you have to always make sure you remove your unallowable costs. And provisional billing rates is no exception. Okay, failure to adjust provisional billing rates based on actual experience before year end. And again, what we're talking about here is just monitoring your rates, right? So if 6 months in the year, you find out you have significant activity, whether it's up or down, you want to go ahead and submit a revised provisional billing rate proposal. The other part to this too is at the end of the year, you have your actual rates. So you want to submit what's called an adjustment voucher. The adjustment voucher just trues up your actual rate versus the rate you've been billing. Okay, some frequently asked questions. Do I submit the provisional billing rate proposal to the ACO or the DCAA? Well, so if you actually look at FAR 42704 indicates the office responsible for final indirect cost rates is also responsible for your provisional billing rates. Okay, final indirect cost rates is just a fancy term for your incurred cost rates. Right? So whoever establishes the income cost proposal, the income cost rates, that is the same entity that also establishes your PDR. In my experience, for most small businesses, it's going to be DCAA. Okay, if you're a larger company, like, for example, I know like Lockheed and Boeing and those guys, they're very large. They actually have more pricing rates, and DCMA generally establishes that. So, right, and they're going to send all that stuff to DCMA, but most small businesses, it's going to be DCAA. Okay. Can I just use the most current fiscal year ended rates, or can I just use the most current fiscal year ended rates for provisional billing purposes? So generally the answer is no. However, it's totally acceptable to use history as a basis for your projections, right? However, you want to make sure you impact the projections on on known activity, right? So, for example, if you know that you are going to win this large award, right, or you have good reason to believe you're going to win this large award, I would recommend impacting your rates with that information, right? And there's all kinds of things they consider, right? Turnover. I don't know if that's something small businesses consider, but it's common for every company to have some turnover. You may want to consider that. Something else you want to consider also is escalation, right? Cost of money that generally goes up. Okay, right now we're in I'm sure you all heard about the pipeline, the gas pipeline, and gas when it shot up, right? I mean, things like that happens, right? And so you want to consider those things when you're developing these rates. Okay, so yes, it's okay to use actual data that you have as a basis or a baseline, but you want to also consider other things that could happen down the road. Once provisional bill rates are established, you can submit proposed changes based on new information. And yes, I did mention that, certainly one of your responsibilities is monitoring your rates. And so that is the purpose of this is as you're monitoring your rates, if you notice changes to your rates, significant changes, then you want to submit, a new provisional bill rate proposal. All right, guys, that's it. That's the end of my presentation. So, at this time, I would take any questions you might have.
Thanks, Joe. That was great as usual, very detailed, and I love the way you explain it in plain English so that we can understand, because you're right, with the government having its own language and all the acronyms, it can get very confusing. So I appreciate that.
Thank you.
Okay, yes, we do have some questions, and I'd like to encourage everybody on the webinar to continue typing out your questions because we finished earlier than I thought. So we have time to discuss. All right, first one is there a minimum revenue threshold to be DCAA compliant?
No, there's no revenue threshold for, as it relates to these audit requirements, there is no revenue threshold. The threshold generally is going to be contract type. So if you're awarded a certain kind of contract, then all these audit requirements kick in. Right? And generally those are generally the contract type is going to be any cost reimbursable contract.
Okay, great. Next question is about QuickBooks. Is this an approved DCAA system? And if not, can QuickBooks be used as a DCAA compliance system if we set it up correctly?
Yeah, so let me just go ahead and clarify. And I know a lot of small businesses use this term, but there's really no such thing as a approved DCA system. DCA doesn't we don't approve systems. What we do is we ensure whatever platform you use meets those requirements. So to answer your question, I personally have audited QuickBooks. As a supervisor and manager, I've seen many small businesses use QuickBooks, and it can work, right? And very similar to what you said, if it's set up correctly, right? And I think that's the key part there. Whatever you use, if it's set up correctly, it will be compliant. Yeah.
Okay, thanks for that. Do the provisional billing rates apply to goods and services?
Well, I would say yes, although I'm not 100% sure what you mean by goods and services. I mean, any, provisional billing rates apply, again, if you're a federal contractor and if you're being awarded a cost reimbursable contract, you are required to submit provisional billing rates, right? I mean, that's kind of bottom line. So I'm not 100% sure what we mean by goods and services, but, it's regardless of, does it really it's regardless of what kind of company you are, right? Manufacturing company, services, that doesn't consulting doesn't matter. It's the contract, the type of contract that really triggers this requirement.
Okay, thank you. Next question is, where can we find specific contracts, audit reports, and provisional billing rates?
Where can you find contract audit report? Well, so when DCAA performs their review of the provisional billing rates, when we finish our review, we're going to communicate with the contractor and let you know what we found, right? So if you submit your PBR and you say your G&A is 10%, and we review it and we find no exceptions, then we're going to tell you, right? We're going to tell you that, based on our review, we take no exception and we approve your G&A rate of 10%. I mean, that's there's no report per se. And so, I mean, that communication happens with all contractors, that one-on-one communication. Now, PBRs, technically, it's not an audit, so we don't issue an audit report. It's generally a memo that we issue with that. Other types of audits, we actually do audits like legal costs, for example. That's an actual audit. We actually issue an audit report, right, et cetera, et cetera. So, but really for any type of engagement we do, whether it's an audit or a review, we're going to have that communication with the contractor and let you know exactly what we found.
Okay, and it looks like we have one more question. And this person just wants you to clarify that the purpose of DCAA is to have our provisional billing rates approved before applying for a contract vehicle such as a GSA schedule. Is that correct?
No, that is not correct. So two points, right? GSA contracts are different. DCA doesn't get involved with GSA contracts. Okay, that's the first point. The second point is provisional billing rates are required when you are awarded cost reimbursement contracts. So you were already awarded the contract at this point. Okay. So provisional billing rates. So I think what you're talking about is provisional billing rates is not the same thing as a price proposal. A price proposal is something that you submit to a government solicitation, right? And the price proposal contains your estimated direct costs, but it also contains your estimated indirect costs, right? So that is very different than provisional billing rates. Provisional billing rates assumes you've already won the contract. Hopefully that makes sense. So you look at it from a timeline. Remember the phases of the award that I talked about? Cost proposal is pre-award, prior to contract award. Provisional billing rates is during contract execution.
Okay, great. Yes, the person said yes, they got it.
Okay.
Thank you for the answer. I know it can get complicated. Okay, so we have another question. We've had some subcontracts, but we've not had to define the roll-up of costs. Can you repeat the basic steps for a small business to develop their initial rates?
Wow, that's a whole nother separate conversation. So, I mean, developing your indirect rates, there's a lot that goes into that, right? I mean, first you have to sort of develop, what kind of rate structure do you want? So first you need to analyze your company, and then you need to sort of understand what rate structure is best for your company. Okay, should you have a G&A? Should you have a fringe? Should you have an overhead? Should you have multiple overhead rates? Should you have an intermediate rate? I mean, that's the first thing. The next step is then you want to make sure you accumulate your indirect expenses in a logical way. So again, let's say you have two overhead pools, you want to make sure you accumulate your costs appropriately. And then you want to determine what allocation base you want. So every overhead pool would need to be allocated based on whatever base you select. Okay, so I mean, that's a different conversation. I would recommend just contacting me offline and we can talk more specifics about that.
Okay, great. Thank you. And I just want to remind everybody that you should check the training calendar on the PTAC website, because we do have quite a few classes related to pricing and contract cost proposal development, contract cost price analysis, that cover a lot of these types of questions as well. So feel free to register for those. And looks like we don't really have any more questions. So I'd just like to thank everybody today for participating, and to thank Joe for giving a great presentation. We will have you back again later in the year. The replay will be available tomorrow from our YouTube channel, so you can watch this again. And I know that it's a lot of information to take in, so sometimes it's good to watch it again and take notes. And we look forward to seeing you at future webinars. So thanks, Joe, and thanks, everybody. Take care.
All right, thanks. Bye. Have a great weekend.
You too. Bye-bye.
Thank you.